What's up guys, welcome to today's video. My name is Nick Palladino. I'm 26 years old and I'm a real estate investor here in the Phoenix area. I hope you guys are all having a great day so far. So today's video, I'm gonna bring you guys some tips and what I look for when I'm purchasing a property, more specifically what I look for when I'm in the process of looking for a rental property. So sit back, relax, enjoy the video. If you guys have any questions or if you guys want me to go more in depth on any of the tips that I mention in this video, comment down below and I'll make sure to make a separate video on that. So let's get started. So on my laptop right here in front of me, I have 12 different points on things that I look for. I'm just gonna basically talk briefly about each specific thing, and then if you guys have any further questions, you can comment down below. So the first thing that I actually look for is I go and look in the county records. Now most of the time, in almost all states, all cities, you're gonna be able to have access to the county records. All that information is public. This gives you information like who was the previous owner, how they got the property, was it like a death in the family, was it a trust, did they just physically buy the property from someone else, and it also gives you a little bit more information on, you can kind of get an idea on if it was a rental property, if it was like a family owned property. When I look in the county records, the first thing I look for is the address of the owner of the property. If the address is the actual address of the house, then they most likely have lived there or their family have lived there. If the address is a different address than the house actually listed, then it's most likely a rental unit. Like for me, for example, my mailing address is not the same as my two rental properties because I don't live there, so any mail that I get is going to be sent to my address in California. So that right there is pretty much a dead giveaway that they have rented out the property, or at least that they don't live there. So some things to take note on that is if it's a rental property, it may not have been as well taken care of as if like a family had lived there before. Usually if you own a property, you take better care of it, so that's something to keep in the back of your head. Another thing that you look in the county records, this is mainly for older properties, is add-ons or additions to the property. So you can kind of get a good idea. There's always usually going to be a sketch or a diagram, or at least the Maricopa County records, or where I purchase my properties in Phoenix, there's always like a diagram of the property telling you the square footage and all that kind of stuff, and there usually will be a little thing that says addition, or it shows you the square footage of an addition. So that's something that you keep in mind during the negotiation process, and it's just something good to know about the property that you're purchasing. The second thing that I look for, this is pretty easy to find as well. Sometimes it's a little bit harder to find, or it's not disclosed at all, but that is when the house was last sold and what the property was last sold for. I really take a look at this before I'm purchasing a property, because I don't really want a property that was sold within the last year, even 3 years, because a lot of the times those are just fix and flippers and they'll just put cosmetic fixes on the property and then just get rid of it. So that's a big consideration to look at when the property was last sold and what it was sold for. Zillow, Redfin, all that kind of information is really public, and usually you can just go down in the price history on those websites and it'll really tell you. Sometimes it'll even tell you like the company, and sometimes they're LLCs and stuff like that, so you can really get a good idea on who owned the property before you and what they did specifically to it. If they bought it for $100,000 less than market value and the next thing you know, 6 months later it's at market value, then they most likely just fix and flipped it. And that's you have to be careful with that too, because a lot of the times they'll like hide some of the more expensive issues that don't have a good ROI or return on investment for them. The third thing that is a little bit unique, and I actually discovered this after I purchased both my properties, but that is going on to Google Maps. Now there's a little tab on Google Maps, I'll screenshot it right here, but this gives you a ton of information on just like the past history of the house. I think Google Maps started in like 2007 or 2008, but a lot of the times, a lot of these streets in popular areas will actually let you go back in time from when the Google Maps took that specific picture, took that specific video of the house. I really look at this for when I want to know when the roof was replaced, when it was last painted and stuff like that. Sometimes the previous owner didn't actually replace the roof, so you actually won't know when the roof was replaced. So Google Maps really helps. On both my properties, I went back and they were both replaced around 2013, 2014. I can tell from that because the 2010, 2011 pictures of my property were a completely different roof, and then after that it was a new roof. So that gives me the idea that my roofs are within 10 years old, which gives me a good time span before I actually have to fix that roof. So Google Maps gives you a good idea on pretty much what your house looked like in previous years, and that just kind of visually too, and it kind of gives you a little more confidence in the purchase as well. The fifth thing that I'm going to talk about is just the lot size. This is very standard. You want to make sure you get a decent sized lot. Another thing that ties into this is getting a property that is similar to other houses in the neighborhood. I mean, it really depends. If this is going to be a house you're going to live in and you really fall in love with it and it's going to be like a family home, then this doesn't really apply to you. But if you're trying to get like a rental house, you want to get a house that's very similar to other houses, because that's going to make it easier for you to rent the house because you know what rents are going for. But the more important thing is you're going to be able to get comps on your house, and comps is basically just figuring out what your house is worth or what your house can sell for based on other similar houses in the area. So if your house is some crazy one-off, it's so much bigger than everything else, it's going to be very, very hard to get a comp on the property, which makes it hard to sell a property because no one really knows what it's worth exactly. So there can be a lot of fluctuation when your house is kind of like a one-off, or if it's the nicest house in a neighborhood that you don't have anything else to compare to it. So my biggest thing is kind of look for properties that are similar to other ones in your neighborhood. You can get a really good idea on your sale price, on your purchase price, what rents go for, and that just makes it easier for everyone because someone else that wants to buy your property, they can look at comps too and they can be like, okay, this is what it's valued at. It just makes it much easier to sell the property later on. Another thing to look forward to, I actually discovered this yesterday. Me and my friend Ricky were actually looking at a property, and there's like something called a recreation fee. A wholesaler brought this to us, and there was like a recreation fee of like, I think it was $4,000, he said, where when you buy the property you have to pay that to like use their facilities or tennis courts or something like that. It was in an older community, so I can see how that happens. My point here is to look out for any fees. If there's HOA fees, if there's huge HOA fees, that's going to eat into a lot of your rental income, so you want to be careful of that. You want to make sure if there is an HOA fee that you fit that into your budget of your cash flow each and every month. I see HOA fees, the one that we were looking at yesterday was like $222 a month, which would be a very difficult time to rent that property. The eighth thing is actually looking at how your house was built or the current situation of your house. Having like tile floors, having durable walls, having block construction on both my properties. They're very, very simple but very durable and pretty much indestructible. If there was carpet in one of my rentals, the first thing I'd probably do is rip it out and throw tile in there, just because tile can last so much longer in between each and every tenant that you have in there, as opposed to something like carpet or like higher end appliances and stuff like that, which you may have to cycle through a little bit faster, as opposed to like tile flooring and like maybe laminate countertops or more durable countertops. It doesn't have to be laminate, but you want to just make sure things in your house, or specifically in your rental property, this doesn't apply to your family house that you live in because obviously that's your choice on what you want to do there, but for a rental property you want to keep things simple, keep things as indestructible as possible and just simple as possible. So I really like tile floor throughout. Both my properties have no carpet whatsoever. They're all tile, which is awesome. They're all block construction, so all the walls are brick, so it's really, really nice, and it lasts a little bit longer as well. The ninth thing, this is very important, and I overlook this on both my properties, but landscaping. Now, this is so important, guys. I've already spent hundreds of dollars on landscaping because both my properties have front and backyards that are grass. Now that I'm going into, when I'm looking for my third rental property, I'm gonna take into consideration what the landscaping's like. I got some quotes from multiple different landscaping companies, and to gravel or to put rock as my front yard and my backyard would be like, both properties would probably be around $10,000. Now long term, that's a good investment because I don't have to have anyone go over there. It's very low maintenance. I don't have to have anyone mow my lawn. But to convert my grass yard into gravel is extremely expensive. So that's something that I'm gonna keep in mind when I look for my third property. If it's already graveled out, it's already low maintenance lawn, that's something that is really important to me. Obviously, if you want grass, it does have good resale value, but you're gonna have to make sure that you maintain that. A lot of the times as a landlord, you're responsible for making sure the lawn's taken care of, unless you have an agreement with your tenants that they're gonna mow the lawn and keep up with yard work. The 10th thing is something that I avoid, or houses that I avoid, and that's houses with one bathroom. These used to be a very popular thing back in the day in the 1950s, and all the constructions, at least in the Phoenix area, a lot of them have one bathroom, and it's just not a huge thing anymore. More people these days are looking for more so like 2-3 bathrooms. A lot of the times they're 2 bathrooms, but one bathroom is just a big inconvenience for a lot of people. Now, granted, there are families, there are people, there are tenants that are fine with like a smaller house with one bathroom, but a lot of the times for the resale purpose and rental purposes, it's better for me to look for 2 bathrooms as opposed to 1, or 2 or more, I should say. One of my properties has 3 bathrooms, the other one has 2, but I don't think, unless it's an amazing deal, I don't think I'll purchase a house with 1 bathroom in it. 2 more things and then we're done. The 11th thing is just making sure that your rental unit that you're looking at, the numbers work and that it's profitable. If it's not profitable, then there's not really a point in looking at it unless you're gonna lowball them with an offer. Now the last thing is, this kind of ties back to the Google Maps thing, but that is just get an idea on when some of the bigger, more expensive renovations were done. Things that I look for in the Phoenix area obviously are AC units. You can ask the previous owner. Sometimes the previous owner actually didn't change the AC unit either, so you may not get an exact answer on when it was last replaced, but you can go back to Google Maps. You might be able to see the AC unit. A lot of the older houses in Phoenix, they have the AC units on the roof, so you can actually get a good idea on it. Second thing is paint. Paint's very expensive. I remember when we flipped our house in Peoria, just painting inside and outside and cabinets and stuff was like almost $6,000. So you want to get an idea on when it was last painted. The previous owner might have that answer, or you might have to look back on Google Maps. And then the third thing is the roof. The roof is one of the most expensive things you can do at a property. It's very, very expensive, and a lot of fix and flippers or like people in general that are trying to sell a home won't usually fix the roof just because, like I said, it's expensive and it doesn't really give them a good ROI, or it doesn't really like raise the value of a property too much, because it doesn't really like change the cosmetics or change the look of the property. So a lot of people for that reason will avoid that, as opposed to like painting the outside where it looks so much better. So the ROI, the return on investment for painting a house is a lot more than getting a new roof on it, because people visually see new paint and they like the look of it, as opposed to a roof. They're like, oh, I mean, it doesn't really look any better. Just in the back of your head, keep in mind, roofs are very expensive, so you want to get an idea on when it was last replaced. And that's pretty much it, guys. If you guys have any questions, comment down below. If you guys could drop a like, it would mean everything to me. I really, really do appreciate it. I think we're over 200 subs now. My tenant actually just called me from one of my properties, so I'm gonna call them back, figure out what's going on, and I'm gonna edit this video and get it up for you guys.